Hey everybody, welcome back to the Maverick channel, back to you with the second video of the day. Now the reason I'm rushing to do this video, the reason why I felt a certain level of urgency to do this video is, first of all, I want to keep it short. Secondly, I rarely talk about Ethereum, and if I talk about it, it's normally not in a very positive light. Though, of course, I talk about how it's king of DeFi and all that. But normally it's not in a very positive light. Actually, I wouldn't call it a positive light. It's more of I don't like what's going on. I don't like paying hundreds of dollars in gas fees. I'm pretty sure everyone does not. But however, I just want to look to inform you, in case I'm sure most of my listeners know this, but in case you do not know, there's a couple of upgrades coming with the Ethereum network. There's the layer 2 solutions like Polygon Matic, and there's the Optimism, which uses optimistic rollups. So those are layer 2 solutions created separately or outside of the Ethereum network that are being built right now. So you can currently use the Polygon network, you can use Optimism as well, but we'll go into that later. The first thing I want to talk about is the Ethereum Improvement Proposal 1559, which is slated to come on the 4th of August, I think. Yeah. So this is also known as, it's going to be known as the London hard fork. So the essence of this is the Git page. This is a GitHub page. Guys, I hope I remember to include the link in the description, but otherwise you can just search for it on Google and find it. This is the GitHub page. Obviously, I'm not going to read all this. The essence of this proposal, or in a nutshell, to summarize what some of the aspects of this proposal, the main thing is to improve the interface, the user experience, the graphical user interface, the ability, maybe not the graphical user interface, the user experience for you to be able to choose the amount of fees or the maximum fees that you want to pay per transaction on the Ethereum network. So currently I think you can do that on MetaMask. You choose a medium fee, a low fee, or the highest fee if you want your transactions to be processed faster. But apparently there's going to be a better experience with the way you select your fees. Maybe you can determine a maximum amount of fees instead of depending on what another platform just gives you or suggests for you, and where you're in a position where you cannot select. You don't have the freedom to select your own fee structure on the network. So you just pay whatever is demanded of you. And the other thing is that this proposal is going to either make, a lot of people say it's going to make Ethereum deflationary. So in other words, reducing the deflationary. But if you read through the article, it's not guaranteed, and there are going to be some uncertainties in how in determining the Ethereum supply. In other words, if this is actually rolled out, if this EIP proposal is actually rolled out, it will mean that there will be a fee burn structure. So there is a base fee on every transaction. When you transact on the Ethereum network, there's the what do they call it? It's like it's a premium fee, or the guaranteed fee that you're supposed to pay on that transaction. Then there's a base fee that you're supposed to pay on that transaction as well. So what this proposal is supposed to do, or is meant to do, is to burn that base fee. So depending on the depending on the amount of Ethereum, so as miners mine on the Ethereum network, depending on the amount of issued Ethereum per block, then the amount of the base fee that is burned per block of transactions is either increased or decreased. So depending on whether it's increased or decreased, it determines whether the Ethereum network is having an inflationary or deflationary tendency. So that's where the uncertainty comes in. And as that is rolled out, no pun intended, as that happens, it means the predictability of Ethereum supply, or the ability to control the supply of the Ethereum on the Ethereum network, as long as it's still proof of work, makes it, I think, impossible or very difficult to do as soon as this is rolled out. So, but of course, ideally, it's supposed to reduce the overall fee experience. So it's meant to reduce the fees by burning that base fee. It means the miners no longer have that base fee, but it also makes the experience much better for the user, in the sense that you can easily select the maximum amount of fees you want to pay for your transactions. So the miners apparently don't like this so much, because obviously, since the base fee is burned, that takes away a big chunk of the money within that. So that is all about that. I'll post this article in the description. It's a technical article, but it's written for everyone to understand. It's if you can speak English, you'll be able to understand the article, and it's a very awesome article. It's written in very clear English. You know, it's nothing complicated about it. So I'll just post it in the description. The other thing I want to talk about is the optimistic rollups, which is one of the layer 2 solutions on the Ethereum network that's being built. There was a bit of a delay, but apparently, uh, I guess a lot of platforms, Uniswap has implemented it, Synthetics has implemented it, and there's a couple of other platforms that have implemented it. And I think the Ethereum ecosystem is very positive about what this technology could do. But of course, there's some caveats to this. In other words, you have to first deposit your Ethereum onto the optimistic Ethereum side or ecosystem, which is not really a blockchain. There's like when you deposit your Ethereum on the optimistic side of the blockchain, essentially transactions can happen. You can do whatever transactions you want, and none of this is broadcasted onto the none of it is broadcast onto the Ethereum network. And after you're done, you can then eventually broadcast it onto the Ethereum network. So I think here the way it's done, it's because the way it's done here, after you're done depositing your funds on the optimistic side, and you've done all your transactions, you've sorted out your tokens, you've finished your transactions, and then you want to deposit your tokens or your assets back onto the Ethereum mainnet, there is a 1 week delay for doing that. So 1 week is a very long time. So ideally, I would hope to know that there's something coming up that would, reduce that delay. Because then what is the difference between using a bank and this? I mean, because no one wants to wait for a week for their Ethereum to be deposited back on the Ethereum network. But apparently I hear then there's separate entities that are working on solutions that could reduce this time from a week to, I guess, no time at all. So there's a couple of companies out there or other blockchain ecosystems that are building a bridge within the optimistic rollup, within the optimism and the Ethereum network, where I think Synthetics as well is building a bridge, if I'm not mistaken, guys. Please do not quote me on that one. There's a very well-known company that's building that. I'm getting this on top of my head. The facts are there, but some of the details may be a bit skewed because I don't have the facts exactly. But I know there's a company building a bridge between this and the Ethereum mainnet to try and reduce that. So you're having more intermediaries, and I don't like that. So you have the layer 2, which is optimism, and then you have other layers that are or bridges that are supposed to optimize that experience. What if there's a problem? Do we add another layer? And every time you add a layer to these networks, you kind of compromise the security because whatever you're adding there may have its own security flaws, which could really damage the user experience if it's not designed properly. So those are the things you have to take note of. Essentially, the improvement proposal that's coming, then optimism, which is one of the really sought after layer 2 layer 2 scaling solutions for the Ethereum network. And of course, there's things like Arbitrum as well. I've actually talked about Arbitrum in one of my past videos. It's another layer 2 scaling solution that's being looked at by even Uniswap. Uniswap, I think, eventually wants to upgrade to the solution that Arbitrum is, putting out there. I think they've already partnered. And they have a really close relationship with that. And of course, everyone knows Polygon. Polygon-Matic is one of the OGs in scaling the Ethereum network, providing a usable layer 2 solution for the Ethereum network to scale it. So I'll just talk about those three: Optimism, Arbitrum, Polygon, because they're the ones that have really spotted out that are in competition, that are up there, that are talked about the most. Especially Polygon has a very large ecosystem, and Optimism as well. It has garnered very much confidence within anyone that's within the Ethereum ecosystem knows of its existence and what they're trying to do. Then I think lastly, just again to talk about Jack Dorsey, the Twitter CEO. Essentially, he's having plans. He's the CEO, or is the founder of Square as well, which is a unicorn type financial company that has taken the world by storm. So he's very interested in Bitcoin, but he's interested in embedding Bitcoin as the financial layer, because he believes Bitcoin is a true decentralized financial layer, a layer that's meant to be a layer of the internet. But as some people like to call it, it's the internet of money, as opposed to being the money of the internet. So anyway, Jack Dorsey is very interested in integrating Bitcoin into the Twitter, and also hopefully, from the article I can see, hopefully he's also looking into really creating a decentralized ecosystem out of Twitter, because if that becomes a trend in the future and people are more drawn to platforms that allow people to have a better decision making process, and the decentralization of that particular platform allows people a certain level of flexibility, then you don't want to be left behind. You want to sort of upgrade and be at the front of the trends, at least go along with the flow, be with the trend as opposed to being left behind. Don't be the Nokia or blockchains. So I know, not those articles. They're amazing articles. So this is FTX. Actually, this segues us into the synthetics market, which I'm always talking about. So FTX is the exchange, which is derivatives. It's a derivatives exchange, and the platform recently raised like 900 million in Series B funding, and it's valued at about $18 billion. And guys, that's in the derivatives market, commodities, synthetic assets. So, and then we also know that synthetics, this network, it has experienced some downtrend in terms of the transactions in the past couple of months, but that's mostly due to the fact that the Ethereum network has been so expensive and it's been impossible to use for an average user. But it's another platform which is really out there. It's everyone's keeping an eye on it out there in the crypto space because of what they're trying to do, still synthetic assets, derivatives, commodities. So you're trading traditional assets onto the blockchain, like, stocks, bonds, and so on. And obviously, I can't fail to mention MetaLex, which is the platform being built by the Fetch.ai team, which is essentially doing that derivatives and commodities. But on this one, you don't buy and hold the commodities, but you rather trade, you short or long the commodities. And of course, they've brought some other amazing use case, some other amazing features, such as in case there's a pair being traded, there's a copper, silver, gold, silver, Tesla, Microsoft, Tesla, Bitcoin. In case there's a trade, there's a pair being traded, you can add liquidity to that pair by adding BUSD, which is the Binance chain version of the token that mirrors the United States dollars, which is the BUSD. So you deposit that here, then you're given, I think, MXBUSD, which you can then which you can then deposit on the platform to then start earning a yield on your deposit, on a percentage yield, depending, of course, it depends on how much has been deposited, and they want to maintain that at a 20% annual percentage yield. So depending on how much has been deposited, the amount of MetaLex tokens or fee structure rewards deposited in there, I think it's just the MetaLex tokens, is adjusted, increased or decreased depending on the liquidity in that particular pair to maintain that 20% APY on those assets. So those are the updates I wanted to quickly bring to you guys today. Hopefully there was some sort of value in this. I'll post the links for Optimism, Polygon, and Arbitrum in case you want to get, and the EIP improvement proposal 1559 in case you want to get a more solid view, a better understanding of what these things are and why they're hopefully important for the Ethereum network as Ethereum waits for the upgrade that's taking so many years, which is the Ethereum 2.0, which is supposed to be a proof of stake network or standard. So guys, that's it for today. And that is it for today. So hope you enjoyed. Have a great weekend wherever you are, wherever you might be, whatever time it might be. Thank you for watching, and don't forget to subscribe and like, and see you on the next one. Bye bye, guys.